Next guest is here to use the chart to support her bullish calls. Katie Stockton is Chief Market Technician at MKM Holdings and says momentum should remain positive. Katie, good to have you back with us.
Thank you.
So momentum is positive. We're going to bring up an S&P chart for everybody. I mean, we've had quite a bounce off those March 2009 lows. You look at this chart and it tells you what?
Well, I would call it more than a bounce even. I mean, it's a really sustained rally, and that reflects positive long-term momentum. We've seen a series of breakouts in the S&P 500, the most recent one being above the January high, which was resistance right around 1150, and that can kind of be considered initial support for the chart right now. But that breakout projects a target of about 1325 for the S&P 500 based on something called a measured move price projection, which essentially expects the trend to project itself at the same rate it's been going.
What do you look for technically for a turnaround? Because if you look at a chart like that, clearly it's just a continued rally up with only a couple of downbeats there. What do you look for? I mean, nothing goes up forever, right?
That's for sure. So what I look for is primarily negative divergences. So if the market internals, which include things like breadth and leadership, were making lower highs, for example, as the market or the major indices made higher highs, that would be a concern. There's a couple of indicators that would flash sell signals, sort of counter trend indicators that I follow that really just aren't there yet right here. And also, of course, looking at price targets and seeing if we're close to resistance on the charts, which would be more concerning as well.
So when you look at things at a micro level or continue to break it down like the advanced decline line, that again supports the bullish outlook here.
Right, and that would fall into the camp of being a market internal, and it's called breadth. So looking at the participation behind a move, and the NYSE advanced decline line essentially reached a new high, which is actually a positive divergence with the S&P 500.
Again, it's a really strong line here, isn't it?
Oh yeah, absolutely. It has broken out above that 2007 high, which the S&P 500 has not yet done. So that's a positive divergence as opposed to a negative divergence.
Does the low volume concern you when you look at this kind of indicator?
Volume's tricky to judge. You know, I think people look at it the wrong way sometimes. Usually you don't want to see high volume on a decline, and that's when it really sends a message, to me at least. So I don't see any trends in volume right now that are concerning. Usually they're driven by things like you know, a lack of news or something like that, and right now we've actually seen volume increase on the up days because of all of the earnings announcements out there.
But when we've talked about some of those up days where there has been weak volume, you're saying that's not as significant or not to worry so much?
What I would pay attention to is the ratio of up to down volume. Now, if up to down volume wasn't, you know, favoring the upside, of course that would be concerning, but the fact that there's light volume, of course that's going to happen from a day-to-day basis.
You talked about new highs. I mean, we have a chart as well, New York Stock Exchange new highs. Are these new highs, record highs, or are we looking at one-year highs?
It's actually new 52-week highs, so new yearly highs in the NYSE listed names. And of course, we've seen a surge in that number, and that surge, it's something we haven't seen in years, and that reflects.
But it helps, of course, when we come down as much as we did before, right? I mean, it's not tough to make a new 52-week high if you just dropped 80% of your price.
I would argue that it is tough because it means that it's clearing some resistance on the chart. So it's getting above that 2009 high, which was a previous resistance level. So oftentimes you'll find that a new 52-week high actually reflects a breakout.
What about the VIX? Because we talk about that a lot with our traders, and I think about the, almost 31% move that we saw this week when you got that S&P downgrade on Greece. I don't know, as a technician, do you say, wow, that's significant, or that's an aberration?
It's a good point you bring up, but the VIX is a transactional sentiment indicator, and sentiment, to me, is sort of the wild card or the greatest risk for the market from a technical standpoint. It has not manifested itself as a real loss of momentum, and that's what I'm deferring to right now. The VIX, of course, saw a very impressive oversold bounce this week. It reached its 200-day moving average, which has acted as resistance in the past. It's already sort of stalled around there, so I think it might remain intact as resistance going forward for the next few weeks at least, but those oversold bounces do tend to reflect a pullback in the broader market. What I found interesting about this pullback just on Tuesday, which I think was sort of a counter-trend Tuesday, was the fact that we saw about half of the components in the S&P that were overbought at the start of the week. Now only about 3% are there. So
good thing to point out. All right, Katie, thank you so much for coming in. Katie Stockton of MKM Holdings.